So that's just another headwind I feel like for them right now. They continue to grow. They have a dividend. The thing is with them, they're just so big and it seems like they're so slow to act. That's what really starts turning me off a little bit with Apple.
Hey Alex, how you doing?
Hey James, I'm doing great. How about yourself?
Doing great as well. You ready to talk stocks some more?
Yeah, let's get to it. We got some big companies to talk to today.
Magnificent companies, as they say. What's
Yeah.
Tell me about what we got planned today.
Yeah, so we're going to be going through the Magnificent Seven, and we're going to talk about why these companies are important, kind of like where that came from, and then we're going to give some buy, sell, hold ratings for each of those, so people want to stick around for that.
All right. Well, that's exciting. Maybe we start at the top. Magnificent Seven. We've heard about these companies a lot. If you listen to the news and whatnot, what is the Mag Seven?
Yeah, so the company list is Nvidia, Apple, Google, Microsoft, Amazon, Tesla, and Meta. And so immediately, these are all companies way above $1 trillion in value. So these are basically some of the biggest companies in the world and some of the most important companies in the world. And that's kind of where that Magnificent Seven thing came from. I think it started back in like 2023. And I think like it's one of those things that really caught on. You hear everybody talking about the Magnificent Seven.
Yeah, yeah, and it's magnificent because of how big they are, how well they've done. How was that coined?
I really think it was just they are gigantic and they're kind of leaders in their industry. And really, they're kind of the companies that at the time specifically were really like moving technology and just people's lives forward. They were just integral to your life across the board.
So Mag 7 in that phrase, it's not an official index or anything like that, right? That somebody's managing. It was more of a colloquial term.
I think you might be able to buy like index funds that are dedicated to those, but
Mm.
as we're about to talk about, they're kind of not doing that well this
Hmm.
year. And the reason why those seven companies not doing well matters is because they make up like almost a third of the S&P 500. So when these companies are doing well, all of those amazing indexes that follow the S&P 500 really get boosted by these. And then when they're not doing well, that S&P 500 actually gets impacted. So that's one of the key things to take away from this.
All right, right, because the S&P 500 is literally built on. Is it the biggest 500 companies in the market?
That's pretty much it. And then the way that it works is the larger the company, the bigger the impact and the more weighting within it. So these seven companies are going to be making the biggest impact on the S&P 500.
Right. So if they have percentage moves, it's order of magnitude more impacting to the S&P than maybe some of the smaller companies having even double digit growth or decline.
That's right. And that's why these are really important companies for all investors to know because ultimately if you hold an S&P 500 index, you are a investor in these companies.
Right. And it seems interesting because, as you know, the S&P 500 and the index is often used as kind of the benchmark, right? How is your stock comparing to the S&P 500? But when you break it down even further, it's almost like that true impact and growth or decline of the S&P 500 is driven by the top 20 or specifically the Mag 7, right?
Yeah, so that's what everybody's talking about is S&P 500 indexes don't feel as diversified as they used to.
Mm.
If I've got 500 companies in there and only 7 of them are driving almost a third of my volume, I mean, that's not as diversified as you think it would be. And one of the ways around this is you can actually get equal weight index funds.
Mm.
So it doesn't matter on market cap, it just equally distributes it across it. So that's kind of one way to kind of get around the situation with the S&P 500. But still, these are extremely gigantic and fairly stable companies. Some of them are seeing declines in their stock price right now, but in general, these are some of the largest, most successful companies in the world.
Yeah, well, it's interesting with these 7 companies in light of the AI build out, the AI demand, and that innovation that we're happening in society and tech right now. They all seem to have their little pieces around it and involvement in it. I'm actually a little surprised to see that they haven't necessarily been growing or have explosive growth as some of these other companies like Micron or some of these more specifically supported AI companies. Any thoughts there?
Yeah, I mean, it's really hard to stay on top. I mean, if you look at how often companies, the top 10 companies in the world in 2000 versus 2010 versus 2020 versus now, that list changes a lot. It's extremely hard to stay on top.
Yeah.
And like you mentioned, they are mostly involved with AI in different ways, but there are much other companies really outside of Nvidia. Nvidia is probably the cleanest AI play, obviously, that we have on the list. But there's a lot of companies that are solely focused on AI and things like memory with Micron. They've been really undervalued, and their entire thesis of the company has completely changed. So I think you've seen a lot of investors kind of shying away from the Mag 7 because it kind of feels like old news versus all of these new exciting stuff and kind of these new parts of AI industry that feels really underinvested and kind of people are piling into that right now.
That makes sense. And that's kind of what, when you hear analysts in the news talk about rotation of money, right? Investment rotation, where, maybe the growth is bigger somewhere else. So money's going over there to capitalize it, which in, in effect seems to stall a little bit of the performance of the Mag 7.
Yeah, so what's really crazy is that there is not a company on this list that we're going to talk to today that has outperformed the overall S&P 500. They're
Wow,
all lagging.
that's interesting, especially since they're all in the S&P 500. But yet,
Right, so that's one way of saying that basically the Mag 7 have actually worsened the performance of the S&P 500 this year. They've actually dragged them down overall.
so could I say this, that to your point, some of the companies in the S&P 500 have performed better than these seven companies, but because the seven companies haven't, they're dragging the overall index performance down. Am I understanding that correctly?
Yeah, just because there's such a big weight that if I have these 7 companies underperforming the rest of the companies, they're able to actually lag the performance of the total index.
Right.
So this is where the question comes of like the Magnificent 7 may not be as magnificent as they thought they were, or at least they were back in 2023.
All right, so that's the Mag 7 that are in the S&P 500, coined because of its size and its impact on the market and industry. Let's take a look at each of these. So the first one, just kind of in alphabetical order, no priority setting, Alphabet Google. Thoughts on Alphabet Google?
Yeah, so it's ironic that the best performer that we're going to talk to today is up low single digits. They're up like
Mm.
right under 6% year to date. So that's not thrilling, if you've been in that. I mean, we're halfway through the year. What's interesting is from a PE perspective, they trade around at 26, which seems pretty reasonable for them. Their forward is a little bit around the same range. So again, it seems like from a valuation perspective that they're actually not bad. They are expected to continue growing as well with on a pretty good clip. So really with Google, they're positioned so well right now. They're the kings of search. YouTube passed up Netflix for watch hours. They have amazing ad business, and they also have a really strong AI with Gemini. So they have a lot of good things going for them, and I think that's what's allowed them to perform the best out of all of these companies so far is that they have very clear areas where they make a lot of money, and that's not going to be changing anytime soon.
Yeah, that's interesting. I guess one of the thoughts with why they're magnificent, if you will, is because of their company diversity in the sense of the products and markets they're involved in, their economic moats. I think I'm assuming and feel like Google's still got a moat in search.
Yes.
Obviously, AI is changing that quite a bit, but they're strong in search. They're strong in all of their areas that they work in with the G Suite and software and cloud stuff. Um, and I feel like given the distraction with chips and things, and this is my opinion, curious your thoughts, it almost feels like it might be a good right time to invest in the Mag 7, especially with a good PE and forward looking PE that's um, while everyone's distracted with chips, specifically thinking as a long term investor, because what I worry about some of these microns and DRAM ETFs, like it's cyclical. So once that demand catches up, you know, is the stock going to drop, but these are still going to be charging along?
Yeah, I mean, I think Google out of the list is probably one of the best positioned for the future. And, If search gets interrupted by AI, that's obviously a big problem for them because they sell a lot of ads. But if they're able to make their own AI, Gemini, to help out with search, that kind of allows them to kind of bend that trend of, if search is impacted,
Yeah.
they'll be right along with it. So out of all of the list here, Google is one of my favorites, I would say. And I do believe from a PE perspective and evaluation, they look pretty good right now.
Yeah, what's interesting is all of these companies are spending a lot of money in building out AI further and trying to get their
Yes.
market share. I think was it just a couple weeks ago or a month ago, AI or Google indicated that they were trying to raise billions of dollars more to support that build out. And I think it actually dipped the stock a little bit. So all of these companies are trying to race and be a part of that core infrastructure for AI as well, right?
Yeah, and what's funny is you mentioned Micron, and Micron just had an insane quarter where their margins are now up to like 85%, which means they've raised prices. And guess who has to buy those prices? These companies.
Right.
And so basically, you're looking at the wallets. These Mag 7 are basically the wallets that are paying for the growth in all
Yeah.
of those other companies that we've been seeing. So that's what happens when shareholders hear about, oh God, we're doing more spend
Yeah.
on this. That's why the stock pulls back. But these are really smart companies. I mean, they have an amazing CEO at Google, and these people know what they're doing. So to me, it's like if they're spending the money and positioning themselves with it, they're doing it for a reason because they see a return eventually. I
Yeah,
think that people just get impatient waiting for the return.
that's true. I recall in one of your AI videos. In fact, I encourage anyone listening or watching to like and subscribe to keep a front of all these videos we have going on. But you got a great AI video where one of the things you mentioned is it's still a little bit unproven about the revenue potential for AI um, in the long run. Like how much, all this spend to build it out, but is there an ROI in there that's going to make sense? So it also puts a lot of these companies spending billions upon billions of dollars building it out if they can't recoup it. And I wonder as a consumer, like, is my chat GPT, is my Gemini prompt going to get a lot more expensive once that build out is all done?
That's a great question. And yeah, exactly. They've spent hundreds of billions already. I think we're going to be knocking on $1 trillion of infrastructure spend.
Yeah.
And when you look at it, what has been the return? They have not, like, the reason why these companies have been killing it and still growing well is because their core businesses are so powerful. They just have been taking all that money and dumping it into the AI build out. So people really want to know what is the return and how much do you actually need. And I think that that's what gets shareholders frustrated by these companies.
Yeah, and I think one could have a contrarian thesis and say there's a likely chance one of these seven will not be so magnificent after all of that. And I think they all realize that, like, who's first, who's going to win, may not have them all standing in this AI race, which could theoretically hurt them in the long run. It's interesting times.
I agree. Yeah.
Yeah. All right, so that's Google, Alphabet doing a lot in AI, a lot of current business economic moats. Obviously, part of the Mag 7, done well over, or at least better out of the 7 over the last year to date. What do you recommend here? Buy, sell, hold?
I like Google here, so I,
Mm,
I would rate them as a buy right now. I think their valuation has come down from where it was, and I mean they're still valued at basically $4 trillion. So I mean they're still a gigantic company, but they have a lot of growth engines left. So I really still like Google. I think they're positioned really well.
That's great. So that's Google, Alphabet. Next one is Amazon.
Yeah, Amazon is an interesting one because they're still a big company, but not to the size of Alphabet. So they're right around $2.5 trillion, so very big. When you look at performance year to date, they're basically flat, which is
Mm,
pretty crazy to see. Their PE is a little bit more expensive than Google. It's right around a 28, and the forward PE is looking similar as well. They have good growth prospects as well. And I mean, the cornerstone of Amazon is their core e-com business. We just had Prime Day, so hopefully you took advantage of that if you needed anything there. That's one of their biggest sales revenue drivers. But the cash cow is Amazon Web Services, AWS. This is where they're the leader of cloud. And I think that's what gets people the most excited about their future because it's very profitable.
yeah.
The other thing that they have is they've made their own custom AI chips. So that's also really exciting because then you start thinking about not needing Nvidia as much and being able to run things on your own chips, and like that helps your own margins. So Amazon has several really good things going for it as well.
Yeah, and uh, yeah, that's great. As a new or young investor, when you're looking at the Mag 7, I'm curious your opinion here. So you see these great big companies, they're all known, most people know about them. You say, okay, seems like a good company to invest in. But then you look at what's happening in the market, they're definitely not getting the attention as some of these parabolic growth type companies. I mentioned Micron as an example. Um, so I wrestle like, okay, I got $500 to put in. Do I put it in something that's, going great um, and growing a lot, or do I think longer term and think, okay, maybe that growth is just temporary till, it reaches a plateau? Is it better for a long term investor to go something more secure like one of these Mag Sevens, or try to see where the I don't know if hype is the right word, but where some of that explosive growth and opportunity is in the short term? Like that's where I always get tempted to be like, oh my gosh, this is, growing like 15% a day, it seems like. And these are barely growing. You understand that kind of challenge thoughts there?
Yeah, I mean, obviously the answer here is it really depends on what the rest of your portfolio looks like. So, like if you're a lot of high risk everywhere else, it's probably not smart to take on more risk, and I would lean towards more safety. But you're right, in terms of growth of the stock, at least near term, these companies probably do not have as nearly as much upside as some of these up and coming names. And that, I mean, it's hard for a 4 trillion, $2 trillion company to double. Like they
Mm,
can definitely do it. And Nvidia has proven multiple times that as big as they get, they seem like they continue to keep going. But the other thing to keep in mind is with some of the high flyers is, I mean, if you look at the memory stocks last week before Micron earnings, they were pulling back double digits a day too.
mm,
So if you time those high movers wrong, you can end up being down really quickly on those. And granted, Micron had amazing earnings and it bounced back, but I think it helps highlight how volatile some of these other stocks can be. Where, you know, when we say that these things have lagged, really there's only 3 of the 7 on this list that if you were in them, you're really hurting this
mhm.
year. Everything else, you're like lagging the market, but you're not like losing a bunch of money on them. So I think it really just depends on what role you want that $500 to play within your portfolio. Is it more of a high risk, more volatile availability, or is it something that I'm okay if I invest here and it lags, but long term it will outperform? That's where I would choose these instead.
Yeah, that's there, and that's a good reminder. And as you said before, you like to have a balanced approach where maybe your investment is 50% ETFs that give you some diversity, and then the rest individual stocks, no more than 20% of that portfolio per stock, just to protect yourself in the event that there is a big pullback in any one of those.
Yeah, so I think we have some great videos on the rest of the channel that
Yeah,
people should check out when we talk more about portfolio strategy and allocation.
yeah,
But yeah, I always want people to have that in mind that when you are investing somewhere, it's important to have a strategy
yeah.
to it, so that when you do have your $500 show up, you're able to kind of fill out the strategy from there.
Talking about Amazon a little bit more, because they're in a bunch of different areas, right? They're in part like consumer product, consumer defensive. They're in AI. They're in AWS cloud stuff. Um, does it make sense when you're keeping on track and researching the company to look at each of these pieces? For instance, I worry about, from the Amazon.com Prime store, you got Costco, you got Walmart, you got a lot of other companies, improving their online services. Amazon's gotten so big with this, like you hear abuses with third party resellers, bringing in crap and things that aren't actually good products. Does it make sense to look at each of their areas of influence or market individually to see, like, okay, they're struggling here, so that might impact their revenue or their performance?
Yeah, I think so. I mean, the thing is, their traditional ecom business is still the bulk of their sales
Mm,
and a gigantic driver. So if that thing is not doing well, the AWS side has to really outperform to kind of make up for that. The key thing to keep in mind though is their ecom business is really low margin. Their AWS business is crazy margin.
mm,
So most of the focus gets put there because they make so much more money on the AWS side, and that's kind of like more of the future growth
yeah.
prospects. On the traditional e-com side, though, the thing to think about is what about robotics
Mm,
over time? And Amazon could probably be one of the main on this list where robots working in their warehouses and replacing all of those kind of jobs would be immensely helpful for their margins. And not only that, like from a safety perspective, all the other things that come into play with robots, with how many workers they have. I mean, it's sad, but like they have a lot of people that could potentially lose their jobs in those warehouses from robots. And those robots are going to be able to work night and day and all of that stuff. So that's kind of where they're positioning themselves is how do I use AI and cloud to then help out my core ecom business as well.
Yeah, and not to mention their disruption in even distribution and delivery and mailing packages and distributing it, where they're not they have their own fleet now. They don't need, like UPS or FedEx, So it's kind of crazy to see how they've built out.
Yeah, and I don't know about you, but their drivers and their performance is so much better.
Mhm.
Like FedEx is terrible.
From
I don't
your
know. I
experience,
don't
yeah.
know about you, but
Yeah.
FedEx is terrible. You don't see as many of the Amazon drivers just smashing packages and throwing them on your Ring camera as you do as like the FedEx ones. I'll
Yeah,
say that much.
that's fair.
Yeah.
That's fair. All right, Amazon, buy, sell, or hold from your perspective.
I would have Amazon as a hold.
Mm.
So I kind of like where they're positioned, where they're going. They seem to kind of get in their own way a lot of the time with the spending. And I think that they have the most to prove with their spend. But if they're able to prove all the spending that they're doing, because they're spending basically the most out of the list, if that pays off, the stock will go up. So I think they have good upside, but I'm not in a hurry to buy anymore.
All right, that's fair. That's Amazon. Next one is Apple. General thoughts on Apple?
Yeah, so Apple is another just, gigantic company, basically like the second largest company in the world. So they're valued right around 4.2 trillion right now. They are more expensive. Outside of Tesla, they are the second most expensive on this list. They're trading at about a 34 and their forward PE is right around there as well.
Mm.
So if you think about the growth prospects for Apple and how outside of AI, like it seems like they're so scared of like really making a strong AI play, you're really paying for the brand name with Apple. I mean, I love Apple products myself. I've got the iPad, I've got the phone, I've got the watch. So you're paying for that ecosystem they've created. But from a business perspective, they look pretty overvalued versus the rest of the Mag 7 outside of Tesla, which we'll talk to them more. But they seem really overpriced currently given their current growth.
Yeah, and of course, the recent news is interesting because they just communicated due to the RAM shortage, they've had to pass down those expenses or increase costs, and so now the stock dipped. I think yesterday or this past week, 5-ish% because they communicated all these price increases on devices.
That's right. I mean, they are directly affected by that because they have all
Yeah.
of those consumer goods that we're talking about, and like the laptops and everything that have the memory in there. So that's just another headwind I feel like for them right now. And I mean, they continue to grow. They have a dividend. The thing is with them, it just feels like such like a they're just so big, and it seems like they're so slow to act. That's what really kind of just starts turning me off a little bit with Apple.
Yeah, and it's funny with all of these, there are some synergies. For instance, Apple in their last WWDC showcased kind of a renewed deep end partnership with Gemini to power some of their AI use cases, which I just thought is interesting. But ironically, the same thing happens in search where Apple pays billions of dollars to Google to be that under the hood search engine. So it's just also funny how a lot of these companies compete, but they also partner.
Yeah, so it tells me that Apple must just conclude that they can't build a better one, or at least they can't build one cheaper than what they can pay for those fees. So
Yeah.
it's kind of interesting. You're kind of handing the keys to one of your key competitors when you do things like that.
Yeah. One of the things I do like about Apple, of course, besides their quality of devices, whether it's a laptop or phone, is at least from their marketing perspective and what they try to communicate and value is the importance of privacy and that end user
Mm.
privacy. And at minimum, they've done a pretty good job with me, at least, making them seem like the company that cares the most about privacy. Of course, who knows for sure, but doing things with AI and trying to have AI models and responses in the engine being on device, so it's or in a protected cloud scenario, because obviously with AI, there's a lot of potential for abuse of data sharing, data stealing, without permission, things like that. So that's one area I do appreciate about Apple is their focus on privacy, at least what they communicate as an intent.
Yeah, I think that's a good call out. And then I think the hope there is that that leads people to buying more of their phones
Mhm.
and trusting more of their phones. So
Right.
like I think it's a pretty good approach for them too.
So Apple, thoughts, buy, sell, or hold?
So Apple I have as a sell.
Mm,
And so again, I love the products. I just don't like the stock, and I especially do not like it at the current valuation.
right. It's you're still paying for some of that brand currently.
You are. Yep. And I think that there's more names on the list that are better.
All right. So that's Apple. Next one is Meta. Overall thoughts on Meta slash Facebook?
Yeah, so Meta has been a wild ride this year. They are floating right around 1.4 trillion in value, but their stock is down basically 17% year to date. So this is one of those, if you've been in Meta, it's been painful this year. They are looking really cheap from a valuation perspective. Their current PE is right around a 17. So they are right there as the cheapest of the Mag 7, and their forward PE is floating right around a 17 as well. So the key thing that has really dragged Meta down is their spend. And they've been kind of famous for overspending. One of the things you don't hear about really anymore is like the really big focus on the AR, like their VR and creating all these online worlds and people to interact online. They spent billions of dollars and have kind of moved all of those people over to focusing on AI. They hired a bunch of super expensive engineer people that are making, basically professional sports player salaries that they have working on their payroll. When you're doing wild things like this, people are going to start taking steps back, being like, "Wait a second here, is this actually a good move, or are you just kind of going crazy on the spend?"
Yeah, not to mention a little bit controversial recent news showcased where they were asking or told employees that, hey, we're going to start tracking your computer usage, your work out, all the things you're doing in the office to help um, teach and model within their AI products to get to know, those employees and trends and things like that, which is a little disconcerting for probably the employee. Like, okay,
Yeah,
they're tracking my clicks and keys and everything I'm doing at every second and gonna use that to build models. That's an issue. Of course, multiple rounds of layoffs over, the last year or two. Um, I heard one of the execs said that morale is the lowest it's ever
yeah,
been at Meta. And then, I love the potential that it's on sale and it could, recover and then you get in at a good time. But then I also worry like, you know, it almost for me seemed foolish that they were spending crazy billions amounts of money on metaverse where it was like a head scratcher. Like, really? That's where you think we all want to spend our time? So
right.
meta makes me nervous. At the same time, though, it's like if you're, you have conviction with meta, you're like, yeah, but just wait. You come in now, and then they have these future things, or maybe dominance in the ad side of the world. They come out with really, finding that perfect balance with AR, VR. You never know. So meta's interesting, but a little bit of nerve wracking at the same time.
Yeah, that's why it's whenever you see a company that gets this cheap, it's there's always other factors
Yeah.
at play that are going on, and there's a reason that it starts getting this cheap. It doesn't mean that it's necessarily not an opportunity. It could be an opportunity, but that's why it's important to do extra research when you
Right.
look at those things. But yeah, I mean, their IG and social media presence and their ability to use AI and get better targeted ads is a beautiful model. Like that, they're going to make a ton of money doing that. And they've already been showing results with that. So that's the part of the piece I like. I don't like when I start hearing about these culture issues in
Yeah.
morale because who is at their best if everybody's worried about their jobs and it's ironic, right? The stock goes down, it puts pressure on the CEO Zuckerberg. Zuckerberg puts pressure on his employees, and then they get mad and maybe don't perform as well. So it's like a circle, right? So I don't know. It's a really tough situation, but they've been able to kind of get through down points in the stock before. So I don't necessarily think that they're going to be down and out, but I do agree with you that some of the spend does seem reckless at times.
All right. So that's Meta. What do you rate Meta? Buy, sell, or hold?
I have Meta at hold,
Mm,
and I would almost have them as a buy just because it's incredible for a company like Meta to be trading so cheaply. I mean,
Yeah.
it's kind of like amazing to see that. But again, with some of these other news coming out, I kind of want to just watch it on the sidelines a little bit until we get some more proof of what's going to be happening over there.
That's fair. All right. That was Meta. Next one is software Microsoft.
Microsoft is another one that has had a really tough year. I mean, they've been caught up in the software apocalypse that we've been seeing. So they're still valued right around 2.8 trillion, but their stock has been down 23% year to date. I mean, that is a massive company to be down so much. They're the worst performer on the list that we're going through today. Their PE is a pretty fair valuation, right around a 22. So you can see it's dropped a lot. Their forward PE is even lower, around a 20.
Yeah.
So they're positioned well. You know, like they're the second player in cloud. You know, they basically have a strong monopoly with Microsoft Office Suite, and they have Teams and all of this other stuff going into it. The question is, how good is Copilot? And how can they use AI and not get taken over by AI? And I think that's the question that they need to answer is I don't think they've really shown exactly how they're going to be addressing AI moving into the future and made people feel good about it.
Yeah, I agree. And even from an end user consumer, I get nervous when I think of Microsoft. Like it used to be, Windows used to be amazing. And obviously they had the computer OS kind of dominance, monopoly, if you will. Um, the Office suite was crushing it. That was the must have. You had to have Word and Excel if you really wanted to seem like be able to work across multiple businesses. Um, and then they had hiccups and issues with their Windows releases and people being, disappointed in that. And then with the rise of the G Suite with Google and
Mhm.
Gmail and Sheets and being cloud based, that really took a lot of market share away from Microsoft as Google kind of did the cloud thing first for Office Suite. Um, and then the Office 365 just, I think, stumbled. And then it was like the subscription, expense that now you got to pay for the subscriptions. And then the fumbling with Copilot and integrating AI in areas where people are like, I don't need AI here.
Right.
And so it makes sense. But again, they have a lot of dominance. They have a lot of recurring businesses. And it's not easy just to say, I want to switch from Office Suite to G Suite, right? That's a whole enterprise thing. So I'm
Yes.
hoping, as a Microsoft for them, this is either a great time to come in, but if they can figure out how to, appropriately leverage AI and kind of fix some of these things, it's a great price, but it also still concerning.
Yeah, and what's funny is the other part is, they do have Microsoft Xbox and like their gaming piece. And that side of the fence is also getting impacted by the memory increases. So
Mm,
you're seeing their price increases on consoles. And granted, that's a smaller part of their business, but it's
yeah.
like another headwind on top of the other things that they have going on.
And then Azure, right? Don't they have cloud services that they've trying to take market share as well?
Yeah, I mean, Microsoft Azure continues to be very strong. They're kind of like the number two player
Mm.
with everything, and I mean, it's continued to grow well. So again, that's kind of the reason to believe in Microsoft is that cloud moving forward is going to continue to be a really important piece of everything.
All right. So Microsoft, is that a buy, sell, or hold from your opinion?
I think Microsoft is a hold at
Mm.
this point. I would lean towards sell, but I mean, it's already down 23%. So to me, it's already dropped so much. The valuation has come down that I kind of like, they've been successful for a very long time. I have faith that like long term they can turn around, but I don't want to be in the stock until I start seeing some good signs there.
So how, and just connecting the dots a little bit, what if you have some conviction in Microsoft, but you're aware of all these struggles? They're at a 20%, better price, if you will. How does what would it take for you to move into a buy perspective, especially at these price points?
I would need some really clear news points to come out to show how they are fighting and they're not and basically I want a really clear thesis as to why they don't deserve to be getting caught up in the software apocalypse. Because I haven't seen anything really to sway me otherwise of like, nope, that makes sense. They're right there with these other companies where AI is fundamentally changing software. You're seeing companies like ServiceNow down 50 some percent, even though they almost have a monopoly in their place. So it's not safe anymore just to have a solution that feels like monopolistic like they do, you need to have a clear answer to AI. And so
Mm,
that's the piece that I would really need to see for me to really believe in them moving forward.
that's fair. All right, so that's Microsoft. Next one is Nvidia. Overall thoughts about Nvidia?
Yeah, Nvidia again is continues to be the largest company in the world. So they did lose their $5 trillion market cap.
Mm,
So they were the first ones to do it, but now they're back down to just under 4.7 trillion. So still a decent spacing between them and Apple, but that gap has really closed. They're only up 1.5% year to date, which
mm.
is pretty crazy to think about because they've basically been the hottest stock, pretty much the last 5, 6 years, if not longer. Them being up only 1.5% is pretty eye opening. From a valuation perspective, their current PE is at 29, and it's down from where it was. It's not the cheapest on the list. It's kind of towards the upper end, but when you think about the growth that they have, it kind of starts making sense. Their forward is just a 19,
Mm.
which is shockingly low for a company that's growing as fast as they are and has huge margins like they do. So you can really see that they are kind of, in my opinion, getting penalized for just being the biggest company. So they're kind of, what is the next phase of AI? The chips were the first phase. Well, now clearly memory is a huge thing, and I think that that's where the a lot of the AI money has kind of been flowing to.
Yeah, so real quick on the forward PE, especially in this scenario where it's less than the existing PE, is what is that telling us?
So when the forward PE drops compared to the current PE, basically what that's telling you is future growth is expected to pick up. And the company then becomes cheaper over time. So when you have a really fast growing company like an Nvidia, they could look more expensive currently, but when you look like a few years out, you can start seeing that actually they are not that expensive if their planned growth continues. Now again, it is just forecasting what the growth would be,
Right,
but these are forecasts coming from Nvidia based off their expected orders and everything. So
right.
whenever I see a company that drops in PE, it means that they must be picking up in growth.
Okay, great. Thanks for sharing it because I'm connecting the dots because it's the price of the stock in relation to its earnings. So that stock price is existing, or used for the existing PE against the earnings and the forward PE. So the fact that the forward PE went down means okay, their earnings to stock price ratio is better. So
Yes.
that's an improvement. Okay, that makes sense. All right. So
Yes.
Nvidia, though, as you mentioned, really, it even underperformed the S&P 500 index to date for year to date. Um, Plagued by being the top dog, if you will, all that competition, because this last year, or at least since I've been investing, they haven't really had one negative earnings report. Um, so, given Nvidia and everything going on, do you rate it a buy, sell, or hold?
I have Nvidia as a buy,
Okay.
and I this is the cheapest valuation that I've seen them at in a really long time. And I think that there will come a point where the story will flip back to we continue to need compute, Nvidia's chips continue to kill it, and their margins continue to be amazing. So once kind of the glimmer of some of the other areas of AI start to dim a little bit, I think you will see Nvidia picking back up. But near term, we'll see how long that takes. But I think long term for sure, that's definitely how I feel.
Nvidia in their space, there's a lot of competition and growing competition. We just learned about Cerebras going public that is competing in that chip sector. You mentioned some of these other Mag 7 companies making their own. Do you worry about competition and the fact that maybe their moat and dominance is waning?
So I don't believe that their dominance is waning,
Mm,
but I do think that they will lose market share over time. So I think that's why you've seen AMD really have a great year so far. I think that you've also seen ARM and like the rise of how important the CPU is in the stack come into play. I still believe that NVIDIA has a significant lead in actual technology versus these other companies. But I do believe that as companies look to kind of get multiple suppliers for their chips, they're just going to naturally go away from NVIDIA products so that they aren't solely relying on just one supplier. I mean, it's pretty much what I would do. If you were running your own business and you relied on just one company, that's a lot of risk. So you kind of want to spread some of that risk out. So I think Broadcom is going to be taking share as well, just because there are a lot of companies out there that want to run custom chips out there. But one thing to keep in mind with Nvidia is their ecosystem of their software is next level, and really no one can touch them on a software perspective. So this kind of allows them to continue to get people to continue in upgrading within Nvidia's chips because they want to stick within their software system.
That's fair. In fact, we did a deep dive of Nvidia and a lot of its data points and how the stock is doing and what's up with the company. I'll put this up for the users, but I encourage people who want to hear a little bit more about Nvidia to take a look at that video.
Yeah.
Um, all right, so that's Nvidia. Next and final Magnificent Seven is what I was almost surprised they're even in it is Tesla. Overall thoughts about Tesla?
Yeah, I think Tesla is probably the wild child of the Magnificent Seven. So they're the lowest valued company, or right around the same as Meta, right around 4 trillion dollars. Their stock is down almost 18% year to date. So not as bad as Microsoft, but worse than Meta. From a PE perspective, we officially enter silly town with PE. Their current PE is at 347. Their forward is a 188. So there's no way you can justify multiples and valuations other than Elon Musk. And he just pulled it off again with SpaceX. And so if I was an original Tesla holder, I mean that stock is up, I don't know, 10,000%, huge, since it initially came out. So they've proven to be able to pivot and grow and make it so you can make a lot of money in their stock. But from a pure data perspective, the numbers just don't make sense on Tesla.
Yeah, and Elon being as controversial as he is, where he seems to go in and out of politics and governmental distractions and doing this or that. And of course, it feels like the sentiment of electric cars and EVs, at least in the US, has changed a little bit or given Tesla some stigma, at least. And there really isn't a strong RV player outside of what the OG car manufacturers are doing, as well as maybe Rivian or something. But yeah, they're plagued with controversy and negative sentiment that I think there's people literally boycotting Tesla stuff now.
Yeah, I mean, it feels like every other week we hear about somebody suing Tesla Autopilot.
Mhm.
We've got, the Waymo cars that get caught in traffic and holding things up. So those are the headlines that I think do affect the car sales overall.
Yeah.
But Tesla is pivoting away from electric vehicles and moving into robotics, and that's really where the future of the company is making their big bet. They're betting that we have a massive, like millions of robots that they can produce, and you have it in your home. They help with production, manufacturing. So that's where they're making their big bet. And so that's where the future of the company is going to be, moving away from the cars and into like, what do those robotics look like?
Yeah, and that's exciting. I'm not necessarily an early adopter on things just because I don't have the money to always get these super expensive tech things.
Yeah.
But it's a bit of a head scratcher as well, right? Because you got the Jetsons vision of living robots or Star Wars and get your own C3PO and R2D2. But
You don't want one of those?
well, I do, but we haven't really crossed the divide where there's the issues of privacy. Okay, it's got this robot with a camera in the
Yeah.
intimate places in my house, and who's seeing that? And can I trust this robot to be alone with my toddler? There was a hilarious video that went viral a couple weeks ago in some robotic demo where the robot was showcasing its, you know, agility and ability to move and kick, and it kicked a kid right in the stomach. I don't know if you saw that video, and the kid
I
buckled
didn't.
over crying, and and it's like, all right, I don't know how ready we are as a society for this. Thoughts?
It's like autonomous vehicles.
Yeah,
It's going to take tremendous amounts of time, sensors, research, testing.
yeah.
And I mean, the robots are going to be able to advance, I think, pretty quickly, honestly. AI allows everything to really speed up with a bunch of the research and calculations and all that. So it's coming. It's a matter of like how good it's going to be and when and what will the cost be, I think.
Yeah, but you have a robot already, and you're not so keen on it with your little Roomba vacuum.
Oh, I hate that thing. I already threw it away.
Yeah,
That thing loses signal all the time. Don't buy Aruba.
yeah. Well, it doesn't have AI, so we'll see what that does to improve these things.
Yeah.
But Tesla, so now obviously there's rumors and talk of Tesla being folded into SpaceX and kind of creating that gigantic Elon. They just should call the stock Elon or something, but
Right.
you hear about that. Anyways, Tesla, what do you rate it? Is it buy, sell, or hold?
I have Tesla as a sell.
Hmm.
It's just not for me. The valuation and the vision, it's hard for me to get my head around when I have all of these other companies doing really good growth with real physical things right now. So Tesla is just not a company for me.
That's fair. All right, the Mag 7 as it's lagging the S&P indicator. Any final thoughts on for our new investors, people listening on uh, how to analyze and to track or follow all things Mag 7?
Yeah, it's been a really interesting year for the Mag 7, with half the list really down and like lagging the market. It shows what's happening right now. Emerging technology is leading to these smaller companies winning right now from a stock perspective. But I would not count out these large companies because they have such amazing businesses as their core. I expect a lot of these companies to buy back. And if you are a long-term investor, I think several of these that we went through today are at really attractive buy points right now.
Yeah, and maybe if you look even farther, they've all gone through peaks and valleys. And, if Microsoft can figure out its next steps and pivot to something strong, it could be a great opportunity for an investor. And that's why you got to stay close to it. It's so crazy how fast things are moving in the market and with technology. In fact, nice little segue in. Encourage, listeners to like and subscribe. In fact, you could sign up for Alex's newsletter that we have coming out now weekly at alextalksstocks.com. So, Alex, thanks for sharing your thoughts on the Mag 7. Any closing remarks?
No, it was a fun conversation, and it's kind of interesting when you look at these huge companies lagging the market. It really makes you wonder, is the market doing as well as everybody thinks it is?
Yeah, right. Because if you take them out of the S&P 500 and assess it there, it may tell a different story.
That's right. Super interesting.
Well, Alex, thanks for talking stocks today. We'll talk to you soon.
Sounds good. Till next time.
Likewise. Ciao.